Welcome back to the Licata Real Estate Showcase. In this segment, I'm with Michael Ullmann with First Heritage Mortgage, a 10-year veteran as a lender and a wealth of knowledge. Michael, before I get started on the mortgage side, tell me what your thoughts are about what's happening in the market. How's the market looking for people?
That's a great question. The answer that I'll give is really dependent on if you're a seller or a buyer. I'll start with seller. The market is very strong. If you're pricing your home correctly, there are a ton of buyers out there that are looking to buy homes. There's an inventory shortage, so if you have a home and it's priced correctly, it's going to sell and there's going to be multiple offers. On the flip side for buyers, it's also a great time to buy. Interest rates are still extremely low from a historic standpoint. Affordability is great. And again, if you're looking to purchase a home, this is the time right now to buy.
Mike, tell me the type of programs that we have here in Central Virginia, but also there are some programs I understand that you won't have in, say, the larger populated areas.
Absolutely. So in Central Virginia, there's, of course, conventional financing. You can do as little as 3% down. There's FHA financing. You can do as little as 3.5% down. There's VA financing with no money down. Something specific to Central Virginia, which is very prevalent, is there's USDA financing, which stands for rural housing. That allows for a zero down payment. You're not going to be able to get USDA financing in Northern Virginia. However, it's very prevalent in Central Virginia. In addition, for first-time home buyers, there's VHDA financing, which will allow for as little as zero down. And if you're looking to purchase a second home, there's conventional financing with as little as 10% down. And finally, if you're an investor looking to buy, there's conventional products for as little as 15% down as well. So Central Virginia pretty much has every type of loan product that a buyer could look for.
Boy, sounds pretty complicated, a lot of moving parts. I guess that's why we refer them to you.
Absolutely. I appreciate that.
So, Mike, tell me, here in Central Virginia, we have a lot of vacant property, a lot of land at greater values, better values than you find in Northern Virginia. Is it possible to purchase a home and get a loan for a vacant lot?
Absolutely. So that's another item that's specific to Central Virginia. There's a ton of vacant lots. There are financing options where you can purchase a lot and build on that lot at the same time with as little as 10 or 20% down. The beauty of that, as opposed to buying from a large builder, is you can buy land and build the exact custom home that you want specific to your needs, which is great because there's a ton of options in Central Virginia that may not be available in Northern Virginia as there's not as many lots.
Now, there's been a lot of talk in the industry about the tax changes that came into effect this year. How's the tax reform bill affected lending?
Great question. This is something that I get asked all the time. People are now filing taxes, and they're just starting to see the effects of the tax reform bill, and they're coming to me and asking the effects that it has on them. To start, the mortgage interest deduction is still up to $750,000, which is considered a high mortgage amount for this area. You could still write off your property taxes up to $10,000, which is great for this area because taxes are generally lower in Central Virginia, so therefore $10,000 is a high amount. In addition, if you're a homeowner and you have a home equity line of credit, you could still write that off if you use that home equity line of credit to purchase your home, or you use that home equity line of credit to renovate your home. So the beauty of the tax law changes is that in this area, there hasn't been really a negative effect. Home buyers are still able to write off a ton of items that renters simply cannot write off.
Well, Mike, one of the great aspects of Central Virginia, besides the lifestyle, is reasonable home prices and lower taxes. You write a lot of mortgages in the Northern Virginia area. How large is the differential, would you say?
What I would say is in the first-time buyer space, generally oftentimes I see a difference of a few $100,000. In Orange, Virginia, for example, you can buy a starter home for less than $200,000. That simply doesn't exist in Northern Virginia. A starter home could be 4, 5, 600,000. Townhomes are significantly less, which all of this means that affordability is significantly higher in these areas, which allows more renters to actually the opportunity to buy.
It's a great place to be selling real estate for sure. Hey, I heard that renting can often be as expensive or more expensive than owning a home. What's your thoughts on that?
So that's a great question, John. Appreciate it. So basically, if you have good credit and you're looking to potentially rent a home, when you go to rent, you oftentimes need to put down a security deposit and a first and last month's rent on $1,500 in rental payment. That means you may have to put out $4,500 simply to rent a property. The good news is, as I mentioned, there are a ton of programs that allow you to actually put less down than renting. In addition to that, oftentimes, especially in this area, I find that rents can actually be more than a mortgage payment. If you factor in your total mortgage payment, which is your taxes, insurance, and the mortgage itself, many times, as bizarre as this sounds, that payment can oftentimes be less when you're buying than it is if you're going to rent. The reason being, there's a huge demand for rent in this area, and therefore rental rates are very high. And if you factor in a mortgage over 30 years, you can find that you actually can pay less when owning versus renting.
Mike, that all sounds great. However, the most common problem I hear is credit. What are your thoughts on that?
Absolutely. So that's something that I hear often. There's three items that I hear about first when I talk to someone about buying or when agents talk to somebody about buying. The first thing they say is, I don't have good enough credit. I don't have a long enough job history. Or I don't have enough down payment money. So from a credit standpoint, the minimum credit score for some of the loans that I mentioned is as low as 600 or less. And the average credit score in America is 680. So you're talking about there are mortgage products that let you put as low as 0 or 3.5% down with a credit score that's 80 points lower than the average credit score in America. From a down payment standpoint, I spoke about a number of programs that allow 0 down payment or as little as 3%, which is certainly way more affordable than having to put 20% down. And lastly, from a job history standpoint, there's a misnomer that you have to be at the same job for 2 years to obtain a mortgage. That's not true. A mortgage lender will want to look at a 2-year history. However, if you were in school and then just changed to a job, you do not need a 2-year history. Or if you've changed jobs, you don't have to be at the same job for 2 years. So,
I just saw information made available to me from the Fredericksburg Area Association of Realtors. In the last 5 years, the average home price increased, home value increased almost 25%. I don't know if there's a better investment out there right now. But Mike, thank you. This has been very informative to us. We really appreciate your time here in the Licata Group Real Estate Showcase. Thanks a lot.
thank you, John. Appreciate it.
I've asked Mike to be part of this segment because I have 2 lender questions. The first one is from Rich W. from King George, who asks, John, I'm interested in buying a second home. What do I need to know?
Perfect. So if you're looking to purchase a second home, the best thing you can do is speak to a lender. Generally, the minimum down payment to buy a second home is 10%. You would be able to get that 10% from savings, checking, retirement. You may be able to even pull out equity from your existing home to buy, and that will allow you to then buy a lake home or a second home closer to your kids.
You know, Mike, I find so many people are looking to come to this area for a change of lifestyle, and that second home is a big part of their plans. Hey, Heather D. from Fredericksburg asks, do you have to put 20% down to own a home?
Great question. I get asked that almost every single day. Absolutely not. First-time buyers in this area, there are programs where you can put nothing down. There are several programs where you can put 3% down or 5% down, 10% down, or everything in between. The answer unequivocally is you do not need to put 20% down to purchase a home.
Boy, it brings to mind, are there any specific programs for military or first responders or teachers or anything like that?
Absolutely. So if you're a veteran, there's the VA. That program has no money down and has no mortgage insurance. teachers, first responders, all of them fit into a program which is VHDA, Virginia Housing Development Authority. They have both grants and down payment assistance, as well as opportunities to help you with closing costs to get you into a home.
Mike, thanks again for being part of this show. We really appreciate it. You brought a lot of great information to us.
Thanks for having me.
And to our clients.